I am a real life trader, and I'm here to remind you to be good. And by good, I mean get out of debt and achieve your financial dreams. I'm accompanied by two very, very special men in my life. My father in law, Carlos Lopez. Carlos, what's going on in sunny Puerto Rico?
It is sunny and gorgeous.
Awesome. And I'm also another very special man in my life is my dad, Ed Reed. Um, oh, you should have typed your name Randall Reed that way because for most of my life, my dad's gone by Randall. So Randall Reed, two R's. It just all makes sense, right? How's it going there in Austin, Texas?
Oh, Bradley, good morning. We're and all real life traders. Good morning. We're
Is,
fortunate to have a bright, sunshiny day. I expect we may reach 70 degrees, but anyway, it's a beautiful day over here.
all right, so you didn't have to shovel snow off the driveway or sidewalk like I did this morning.
What is snow?
It's that stuff when they think it might be coming, Austin shuts down 2 days in advance, and
Yes,
everyone
you're right.
cleans out
That's
the
a good
grocery stores and
description.
hides in their homes.
That's the day we close the island.
When it snows in Puerto Rico, yeah, we got bigger problems than grocery stores if it snows in Puerto Rico. Well, I asked my dad to come on because my dad's had a strategy that he's been using for a long time. We kind of nicknamed it Income Now, and it's one of those strategies that 4 or 5 years ago, well, actually for a long time, my dad's been trying to teach me this strategy, but he kept saying this weird stuff like dividends and puts and calls and selling stuff that you don't own, and I was just cross-eyed. But I've eventually caught up, and I would say it's a fairly advanced strategy because you are selling naked puts, but it's fairly reliable because is the way my dad explains it to me. We'll tell you what, I'm not going to explain it. You explain it. Go for it. What's the strategy? How does it work? And why do you like it so much?
All right. Thanks for that nice introduction, Bradley. Well, I'm going to start off by saying a big congratulations to all real life traders who know how to do that program. It's like you have a Learjet and you know how to fly it. Uh, Real life traders know how to fly that Learjet, whereas I'm like the guy who has a single engine Cessna and I know how to fly it, but obviously the Learjet is much better. So big congratulations there. But anyway, Um, as Bradley has named it, Income Now is a simple system that I've used for a long time that works for me. But as I said, as I may have alluded, uh, I like the real life trading system, and I'm in ground school now for real life trading, and pretty soon I'll get in the simulator for the Learjet, perhaps. But anyway, um, the,
Love that analogy.
the uh, I'll use the term income now, although that sounds rather unnecessarily officious. But anyway, its trading plan has some ground rules, just like real life traders have. And one of them, of course, is to be aware of support and resistance and operate with that recognition in mind. The basic idea is to use mostly dividend stocks. And the idea is to sell the puts and or sell calls with the intent to earn, or as you might term it, capture both the premium dividend on the option, both the let me start over. Capture both the premium on the option and the dividend, which comes along, usually 4 times a year. One of the key features here is like if you're starting from a cash position, uh, if you sell puts to expire shortly before ex-dividend day, expire shortly before ex-dividend day, so that if the stock is put into the account, then you capture the dividend. That way the account earns the option premium And if it's put in, it's right there to capture the dividend, which is coming along shortly. Now, if you start from ownership of stock, the idea is to sell calls which expire shortly after dividend day, so that if the stock is not called away before expiration day or on expiration day, if the stock is not called away, pulled out of the account, it's still in the account and will shortly receive a dividend. Um, this this has been easier to do in the past than it is right now. You know, the stock market is high. There's lots of currency fluctuations in the world. We all are aware of the oil company problems, but and so I see fewer opportunities now than I recall in the recent past. But anyway, I've prepared 4 examples of having done this just recently, and these
cool.
are real life numbers,
All right,
including
we got
commission.
8 minutes.
Okay, you just cut me off whenever you're ready, Bradley.
All right.
Here's one example. On December the 10th, I sold a put, $33 strike price, out to March the 20th on AT&T and received a premium of $174. Now on that stock, ex-dividend day is April the 7th. And as I said, I sold a put out to March the 20th. So on this one, uh, if the stock is put into the account, then another $47 will be realized. As I said, the option premium was $174, and the dividend may be $74. If that happens, then it will amount to $221, or about $55 a month on a block of $3,300, which is about 6.7% in 4 months. If the stock is not put into the account, then it's $174 in about 100 days, and you know, that's certainly earning money at a slower rate than real life traders do. But that's one example of what I've been doing.
How much, do you know how much margin that takes? So if you collect the dividend, you're getting about 6%, 6.7% over 4 months. If the option expires worthless, what kind of do you measure that percent return?
Uh, I always on puts, I always have at least half the money in the account, and frequently it's a little more than that.
Right.
Uh, another way to have some reserve in the account that I like is those municipal bond ETF funds where they use leverage, you know, and you can earn about above 6% tax free that way, and that that municipal bond ETF sits over there as a cash reserve to keep the stockbroker at ease and back up the puts, which are not funded by pure cash. So does that
Gotcha.
answer the question? Yeah, like
Um,
if you just use 50% margin, then that 6.7% would be doubled. And that's one reason, one big reason I like to sell puts. If I do
gotcha. So
calls,
it's somewhere between 6 and 12% um, for one outcome, and it's almost 7% for the other outcome in 4 months,
yes, sir.
which is
That's it.
complete rock star status. Rick is asking how many contracts was that?
Well, this arithmetic, these examples I prepared are based on one contract. You know, in real life, we do more than one contract to minimize the commission expense because it's about the same whether you do one contract or multiples. But
Gotcha.
anyway, I've broken this down so that for the purpose of illustration, we're talking about one contract / 100 shares.
All right. We got 4.5 minutes left, and I was wondering, I know you have your screeners, you use the Fidelity website, you also use Yahoo Finance. I was going to switch over here to FinViz, and I went to finviz.com. It's that.com. And then I clicked on screener, which is this one right here.
I see it.
And this allows you to search the market for stocks. If you have the descriptive tab, you can go over here to say stocks that are optionable and shortable. If you go, let's see, you've got a dividend yield, so you can say, you know, I want something that pays. What did we used to search for? Was it 7%? I think we looked for 7% or higher. And then let's just say an average volume. Some of these tend to be a little bit lower volume, so I'm going to say, oh, I said under 100K. I want over 100K. So over 100K. And so for stocks that are optionable and shortable that pay a dividend of over 7%, right now it's finding 166. So if you guys want, you can go through here and find these and then start doing the research on the put premiums at key pivot points. You can also, let's see, there's a way to do dividend dates on here, I believe. I saw earnings dates. But there may be a way to look at this and select ones that have dividend dates coming up. But I don't see it right now, and we got about 2 minutes left. But this is a way that you can research tickers that meet the criteria. Let's just for kicks see what happens if we bump it up to over 1 million shares, and we still get 54, which is a real good number. It's good volume, it's good dividends, they're optionable and shortable. And like my dad was saying, the market is going up right now, and when the market goes up, option premiums go down. So now may not be the best time, but wait for a rollover, which tends to happen every 2 to 6 weeks in this market. And you know, when it starts to roll down, premium goes up, and that may be where you start to take some more positions. Now we got 2 more minutes. What are some of the tickers that you are taking a look at right now? Or some of the tickers that you like?
I've been noticing Silver Wheaton and Verizon and
SLW.
AT&T. And I want to mention an interesting little situation I just discovered on PDLI, like Papa Delta Lima Inca, PDLI. It's a company which invests in promising pharmaceuticals, biopharmaceuticals, and they advance money and then receive a royalty stream. But what caught my attention is that they have already declared dividends for the entire year, of 2015, and the dividend payout rate is above 8%. Already, you know, dividends already declared. So if you capture that and some put and call premium as it goes along, now it trades very few options, it appears. But anyway, that's an idea on the front burner.
Nice. Okay, so I typed some tickers in there. SLW, Silver Wheaton, T is AT&T, KMI is Kinder Morgan. One thing that I know my dad looks at, and we got about 30 seconds left, but and you can do this on FinViz, but you want to check the health of the company. You want to be sure that it's able to pay the dividends, and that perhaps maybe it has been paying dividends for a while. So there have been, let's see, if you click in here in this top part, you can click on a ticker symbol, and then it gives you all kinds of interesting information down here to help you assess the health of the company to make sure that that dividend payout is sustainable, because something like SRV recently cut their dividends and their stock just tanked. This is about when they decided they were going to cut their dividends, and you see what the stock is doing. So be sure the company is healthy and will be able to pay their dividends. Rick asked, does he usually sell his puts 1 to 2 months out? Do you have a particular time frame that you look for?
Well, the sweet spot seems to be 2 or 3 months.
2 or 3 months. Okay, because dividends usually are about every 3 months, right?
Right.
All righty. Well, I hate to cut you off, but we are out of time. It's time to start doing our research. So
Well,
thank you very much.
let me
Go
say
ahead.
one more thing, very briefly. If I sell a covered call, I only sell it from a stock ownership position, or if I sell a call, it's covered. The stock is in the account. Because if you sell it naked, obviously there can be a merger announcement or whatever. The price of the stock runs way up. Okay, well, real
Gotcha.
life traders, I enjoyed being with you this morning. Have a good day.
Thanks, Dad. Love you.
Muchas gracias.